Palantir came out with earnings on Monday and they absolutely crushed it. Beats and raises all around. Today, I'm going to talk a little bit about what they said on the earnings call, take a look at a couple of their metrics, and then I'm going to show you what moves I made in my gambling portfolio with my Palantir call options. So let's hop right into it. I want to start with talking a little bit about. Actually, we're going to listen to Sean because I absolutely love listening to Sean talk. He's just, I don't know. I love the way the guy comes across.
Thanks, Ryan.
Let's go.
Ryan just talked about the incredible customer momentum behind sovereign AI. I want to spend some time on the underlying product investments that positioned us for this moment. AIP succeeded because it's the best, most ergonomic environment for AI in the enterprise. It integrates mixed mammal AI teams across heterogeneous, interdependent workflows and delivers the fastest implementations that turn tokens into real economic value for our customers in complex, high-stakes environments. What makes it work is exquisite and layered. Data integration and transformation, ontology and actions, security and audit, workflows, agent SDKs, agent orchestration with telemetry and observability, evals and customer-specific benchmarks, AIP Evolve, and our latest investments in post-training, both supervised fine-tuning and reinforcement learning. Every layer builds on our foundational primitives, and every layer flows together. This infrastructure captures the rich, operational telemetry to feed the compounding loop, an automated model factory that runs inside the customer security boundary and accumulates intelligence in weights they control. Last quarter, I said tokens are the new coal and AIP is the train. Now our customers can build their own locomotives. AIP is where your sovereign AI is built, deployed, and compounded. We're excited for a new era, not one of bench maxing, but of bench making. The assumption that the frontier is actually the best performing is just not borne out in practice. Within 24 hours of bringing Nemotron Ultra into our stacks, we found 5 production tasks where a standard Nemotron Ultra model without post-training beat frontier models. This underscores that a handful of common benchmarks can be gained. That era, bench maxing, has ended. The new era is bench making.
All right, guys, we've heard this same talk from Alex Karp, the CEO, for the last month. Basically, our software's the best. If you want real value, come to us. And we're seeing it in the numbers. Let's talk about the stock price a little bit. Absolutely skyrocketed after the numbers, huge gains. But if we look to the year, we're still down. Guys, I said it before, I'm going to say it again. I think by the end of the year, this will be a $200 stock, if not before that. This might be the last time you ever see this stock under 110, let alone under 120, right? That might have been your last opportunity because I don't think these numbers are going to stop. I think they're going to keep moving up and up. So if you don't know, this is a rule of 40. It's a metric that they like to tout. It combines their sales revenue, as well as a bottom line and earnings metric together, and it comes up with a percentage. So a rule of 40 would be pretty darn good. They've absolutely crushed it, and they continue to crush it. Their net dollar retention rate is absolutely amazing. It went from 150 to 157. So what they're saying is for every dollar of their current customers, it went to $1.57. Absolutely amazing. They're keeping their customers, and their customers are spending more. I've talked about this metric before. It's one that I'm absolutely following, and it's phenomenal. Let's look at their guidance. Their guidance, we're looking at 8.15 to 8.158. Guys, I think we all know they're going to beat this, right? So this is their full year guidance. And if we look at their cash flow guidance for the full year, 4.5 to 4.7 billion. I think they're going to beat that too. Absolutely phenomenal. Okay, guys, let's talk about my Palantir call option in my gambling portfolio. Last Friday, I made a video talking about my call option and should I hold it into earnings. Guys, I did not hold it into earnings. I got scared and I sold it. I made $100, but as we all know, that was a mistake. I realized that mistake on Monday and I bought back in. I bought a cheaper one to lower exposure, but it still absolutely crushed it. So $1.63 I paid, so $160 or so, and I cashed out for over $1,400. You can see right here, absolutely amazing. The problem with that is if I would have kept this call, and let's go to what the call option would be worth today. All right, we can see it's a strike price of 8.7 was which I bought, and the 130. Let's go down to the 130. $3,000, right? Yesterday it was trading up over $3,000. I probably would have sold the same way that I sold this call option. I would have easily doubled that 1,400. It would have been 2,800. So something to think about going forward. Yes, I did amazing. This has been the best call option that I've ever had. $1,400 is actually just amazing, and I'm super excited about it. But I still have to think about the downside and the $1,400 that I am missing out on, and it's just something to think about going forward. Is it a mistake? Was I smart for pulling off risk? I don't know. It's something that I'm definitely going to think about going forward. I want to be able to look back at these videos and see what I did, what I was thinking. All right, guys, that's where I'm at with this video, and I will see you in the next one. If you want to see what I'm doing next in either my gambling or my investing portfolio, hit the subscribe button. Thank you, guys.